on the 15th, worth over $120 million. That's massive volume, right?
Oh, absolutely. That kind of volume tends to validate the price move. It shows broad participation, lots of buying and selling. It wasn't just a few trades pushing the price artificially. Real interest there.
Okay. Let's shift gears a bit. Stacking, oil field equipment. Current price is $3.63. What's the initial picture here?
Well, the stack is tied to the energy sector, right? Oil and gas. And the data shows they've hit a rough patch. Revenue down over 10% in 2024, earnings down almost 30%.
Oof. Not great numbers recently.
No. Suggest some industry headwinds or maybe company-specific issues? Or both?
But analysts still see some upside. A $5 one-year target. That's what, like a 30–40% gain potential?
Moderate growth potential,
Yeah.
yeah. They also point out the PE ratio is low, 8.6 times earnings, compared to the broader U.S. market around 16.4.
And for you, the listener, that PE ratio, price to earnings, it kind of tells you how much investors are paying for each dollar the company makes. So lower is cheaper.
Sometimes. A low PE can mean it's undervalued, or it can mean investors are worried. Given the recent performance and the whole oil price roller coaster,
Right.
that lower PE might reflect those risks. The market might be saying, yeah, it's cheap, but the future looks tough or uncertain. The $5 target suggests analysts think it's a bit too cheap, but those sector risks are absolutely key.
Okay, got it. Moving on to Beal-Weibel Corporation. This one's been in the news. Post-SPAC merger. Price around $36.22.
Yeah, and talk about volatility again. A 500% spike right after the merger. That's wild.
Huge gains recently, too. 135% in the past week, 126% over the year. But yeah, that screams high volatility, like you said. What's the driver here? And maybe quickly explain SPACs again for folks.
Sure, a SPAC is basically a blank check company that's already public. It raises money, then finds a private company like Weevil was, and merges with it, taking it public faster than a traditional IPO.
Gotcha.
That huge initial jump, often fueled by hype, speculation around the new public company. The gains since then suggest continued interest, but yeah, the volatility is intense, hitting an all-time high and low on the same day, April 11th. That tells you everything.
Wow. And analysts seem pretty bullish, too. Targets between $40 and $50. But there's a warning note about global tariffs. How does that play in?
Right, that's the macro picture stepping in. Big economic stuff like tariffs creates uncertainty. It can make investors nervous, more risk-averse.
Even for a hot stock like this.
Especially for high growth, maybe higher risk stocks. When sentiment sours globally, even companies doing well individually can get dragged down. So those analyst targets, they look good, but external factors could definitely throw a wrench in the works, short term at least.
Makes sense. Okay, next up, XAGE, Longevity Health Holdings. This one looks different. Price is way down at $0.17 bioaesthetics sector.
Very different.
Yeah.
And extremely volatile, but in a different way. Look at this.